is this idea that a corporation or an individual could take self-custody of their own property, and that is critical to sovereignty and freedom and liberty. And Satoshi, whoever he, she, they were, came up with a technology network, a decentralized technology network based upon cryptography, software engineering, borrowing some themes that pop up over and over again in electrical engineering, servo mechanisms, first order negative feedback loops. They created that engineering system and gave as a gift to humanity a monetary energy network. And what that means is we have for the first time the ability to collect energy, store energy, and channel energy through time and space with de minimis power loss. Okay, this is metaphorically speaking, this is a dam that's captured the potential energy of gravity in the form of a liquid water, and you're going to use it to generate electricity. Or it's compressed air, or it's running water. You get a water tower, and you're using a water tower to generate water pressure, or an aqueduct, or it's fire, which is just harnessing chemical energy, or it's electricity, and I'm harnessing electricity. We have harnessed monetary energy on a network. And that, I think, it's just as profound as electricity or fire, right? It's very poorly understood. And why do you discover it? The reason I discovered it is because the money got broken last year. I mean, the money's always been broken. The history of humanity is empires creating a strong currency with integrity and durability, like the Lydians striking a coin, the Romans striking a coin, the British striking a coin. Then it gets debased as the government becomes corrupt. As the money gets devalued, it gets counterfeited. Eventually, the currency is debased. The money breaks. The economy goes into hyperinflation. The economy collapses. The empire falls. Another empire rises. They replace the old broken currency with a new currency. It goes on thousands of times, thousands and thousands and thousands of times. The last time it broke is 1971. What happened was, the U.S. was on a gold reserve standard and based on Bretton Woods, and then the U.S. defaulted on that standard, and they decided to go off the gold standard. Every other country was tethered to the dollar. When the U.S. defaulted on gold and they went to a more inflationary environment, they started inflating the currency 7 to 8% a year. So the currency started collapsing at 8% a year, but you can almost not notice 8% a year. If you're getting paid 5% a year interest, maybe you might get through it. But if you think about money is divided in a medium of exchange and a store of value. The medium of exchange is a currency like the dollar I used to buy coffee. The store of value, once upon a time, mythically, it was gold. I buy because gold is going to store value and you can't debase it so fast. Then after we gave up on gold, then the store of value became sovereign debt, bonds issued by governments. When bonds issued by governments yielded 8%, Paul Volcker back in 1980 raised the short-term interest rates to 18%, 19%. So if you're getting paid 8%, 12% interest on a bond, then that's a store of value. Then we went to ETFs and stocks, the Vanguard 500, and we gave up on the money as a store of value or the currency, and we used equity. And you bought the S&P 500 index. And that's been the status quo for the last decade. The S&P is generating 10% return. The money's losing 7% of its value a year. You're getting a net 2 or 3% gain, and you're taking the risk of owning equity, which means you're getting a net nothing gain, but you're holding your value. In March of 2020, the monetary inflation rate tripled. And we went from a 7% inflation rate to a 21% inflation rate. And the S&P in the last 12 months is up 32%. The NASDAQ's up 40-something%. If you had money in the bank, you lost 32% of your purchasing power against equity. The average single family home in America, it was up 24% according to the front page story in the Wall Street Journal yesterday. 24% inflation rate in homes in 12 months. If you were holding cash, it got 24% more expensive in 12 months. If your salary went up by more than 24%, you broke even. If you owned assets and you did nothing for the year and you laid on your floaty in the Hamptons, you had the best year of your career doing nothing because the money collapsed and the assets went up. If you worked on Main Street in a job and you worked 32% harder, you worked 32% harder to get nothing. Everything's, you just kept up. So I would say I lost my faith in the money in March. Like it kind of broke my faith in the money, and it caused me to go back and look at first principles. And I started studying Austrian economics. And what I realized is the inflation rate is not 2%. CPI is a lie. CPI is just a crippled, misleading metric. And it makes me think of like, there's a famous statement, it's attributed alternately to Ogilvy and Mather, and also to Joseph Goebbels, the propaganda minister of the Nazi party. And the statement is, all of our focus groups show us we can't tell people what to think, but we can tell them what to think about. Okay, so I can't convince you of something, but if I get you thinking about CPI, we all study CPI, and CPI is consumer price inflation. And as long as I define what it is, then I can tell you that the inflation rate is 2% or 3 or 4 or 1, and then there's no problem. Well, the truth is inflation was never CPI. No one thinks from first principles. If you thought from first principles, if you're an engineer, you'd realize inflation is the rate at which prices change for everything we want to buy in the civilization. And so if you calculate a vector, if you calculate the 1,000 things you might buy and you calculate the price of them this year versus the price of them last year, then you realize that the prices are changing at different rates for different things. And then you realize that they're changing at different rates in New York City than they are in Kansas. And then you realize they're changing at different rates every month. And then you realize that the average person wants different things. Some people want a house in the suburbs and send their kids to Ivy League schools. And some people want to sleep in their parents' basement and watch Netflix. And there's a different inflation rate for the former than the latter. And if you just want to be rich, by the way, newsflash, there's a different inflation rate if you want to stay rich or be rich. It's different than watching Netflix in your parents' basement. The inflation rate, if you want to be rich or stay rich, was 32% this year. That's the rate at which the S&P 500 went up. What I realized in the last 12 months is all of the conventional thinking about economics and monetary theory and investment theory was prejudicially biased and just wrong. And most conventional wisdom was based on arithmetic, and it was leading people to a horrific outcome. And it shook me out of my lethargy. And that's why I started on this search, mad search for a store of value, for a way to protect my company from the hyperinflation that we have, and we are going to keep having. And I discovered Bitcoin because my mind was opened.